Hey guys, what's up? It's Andrew here from Pennant Players, back with another video. Today we're going to be talking about the RSI indicator. So without further ado, let's get into the video. So the RSI indicator is one which you can add very quickly. Just go up next to this share. I'm talking in TD Ameritrade Thinkorswim. So going right next to the share and then add it with this little chemistry bottle looking thing right here. And then go on lower and then click in here to add, and then click it, and then add selected, and then apply, then OK. So it's going to show up right here, and you can set these two lines. I set them to 30 and 70. But you can do it however you wish. And so what is the RSI? Well, the RSI stands for Relative Strength Index. And something to keep in mind about the RSI is that it is not anything necessarily special, but it is a way of comparing the relative price action. So it compares how it's trading at what price, and then compares that to how it has been trading previously. So what it does is it is essentially putting the price action in a different view. You can see it through a different lens, and it measures how overbought or oversold a particular equity is. So for example, we can see here on ESEA, it doesn't necessarily matter what stock it is, but this is a very good textbook example of something that follows the RSI pretty quickly. And really, it has a strong connection with the RSI. Some equities won't do that. Again, RSI is just one indicator, and you will always like to see it paired with other indicators. But for this particular case, the price action follows the RSI pretty well, and the RSI follows the price action pretty well. They're very intertwined. So you're going to want to use RSI with your swing trading. Now, again, you can use it with anything with different patterns. You can look at some of our previous videos on swing trading if you'd like to learn more about that. But I find that it works best with swing trading as you're trying to find deals. So again, the RSI is a measure of how overbought or oversold a particular equity is. And what do I mean by that? Well, we can see here that I have my limits set at 70 and 30 on the RSI. These two yellow lines here, as you can see, and this is pretty standard. I mean, you can go up to 80, or between 70 and 80, and between 40 and 30, whatever you prefer for the limits. But what I'm essentially trying to do is see when it crosses below this 30 or within that 30 range. If it's between 25 and 40, that's a pretty good deal. So we're going to try and find where it hits that point, where it's around that range, because this is a good indication that it's oversold, meaning there's a lot of people selling it comparatively. Whereas in terms of if it's above 70 or within that range between 70 or 80, that's comparatively going to be much more many people buying it, if that makes sense. So again, the RSI is just going to be a way to put the price action that you can already see into a lens to see it through a different way. Now, it's nothing like special, if that makes sense. It's not anything that you can't see on your own. It's just simply to put the price action comparatively to how it's been trading into an equation to get the relative strength of how overbought and how oversold it is. So you can use this in swing trading. For something like this, I like to find uptrending stocks or equities that have the swing trade pattern, where the price action follows it up once it hits oversold. So it hit oversold right here, and over here, and then it followed it up pretty nicely with a nice spike here. 72% This is a penny stock, so it's highly volatile. And then once it kind of gets in that range, you can see here at around 65, it was when it peaked in the price action and it falls down. So what you're going to look for here is, with me at least, I'm going to be looking for a move of this 46 RSI all the way down to this 35-ish range before I buy in here. But we can see this is coming towards this support line. So once it kind of comes towards the support line and hits around that 35 range of the RSI, I can buy in and have a much higher probability of this being a winning trade, because I know that I'm getting it for a deal, because that is in essence what the RSI does. It's to find deals, to find where it's been trading versus where it's trading now, and to find a deal. So if you can see that and anticipate that, then you can have a much higher probability of making winning trades. So again, just to recap, the RSI is just an indicator that formats the price action in a different way, so you can see it through a different lens. It is essentially the measure of how overbought and how oversold a particular equity is, which can help you find deals, essentially. Then third, it's very parable with swing trading. Again, you can go watch our swing trading video. They tend to be very intermingled, and it's definitely a very strong measure of a swing trade. And just to use this with caution as well, because it doesn't always have to follow the price action. Something could be increasing on its RSI and be decreasing in price. So definitely use it with other indicators. Definitely use it with stuff like the MACD, the volume, general trend directions, pattern formations, in order to get a more in-depth understanding of the trade that you're making, because again, you don't want to base things solely off of one indicator. So I hope this video was informative and helpful. So be sure to subscribe, share, and like for more. This is Andrew, and stay green.